Now, everyone, let's look at the Boomerang, three aces, top-down analysis with all the rules, and we're just going to dig in deep into this analysis. So first of all, the first thing I do is I start on the weekly just to get an overall picture. Again, you guys are aware, I do not trade the weekly time frame. It's just to get an overall picture of a direction. Even though we're still buying and selling in the same week, we're just having it there as a basis to give us that clear direction. So the first thing I look for is equal lows or equal highs, and I can spot some right here. So there's equal lows there. So let's just add that on. Equal lows, and obviously the liquidity pool just below, which should be really, really tiny from this area down here. Still going to be the same on the daily. So there's a liquidity pool here at this area. Again, stretch your screen. If you're currently zoomed in and it doesn't let you, just stretch your screen. Stretch it across. So now we've got that as a reference in the event that dollar could potentially depreciate, right? So this is done. The next step is to look for some equal highs. Do we see any equal highs? Personally, I do not see any equal highs. Almost an equal high, but that's not really been filled. So if there's nothing there, what we want to do is identify any potential trend lines. Now, it's quite hard to indicate, okay, is this the right trend line? You see, or is this the right trend line? From here, which one do we use? Now, let's go to the daily to get a clearer indication of the structure. So first of all, this one is definitely not valid. This is a valid trend line. As you can see, clear third tap, 1, 2, and 3, right? So this was an analysis that I did on the live streams back in June, and I was anticipating price to obviously come up here to complete the 1, 2, and 3. And what I always do is I separate another potential trend line inside of the same pattern in the event that price might break the trend line, such as this. And if it breaks it, let's say down here, then I'm prepared in advance that if it breaks it, I've got plan B trend line, right? So plan A trend line failed, got broken. Now this is plan B trend line. This is the most relevant trend line. So this particular trend line, we don't need it anymore. So we can remove this. The 3 taps have been filled. The reason it was also a good trade is because we've got obviously the 1, the 2, and the 3rd tap rejection entices traders to go short. Now they've been stopped out, right? We covered that in the previous videos. So now we've got this particular trend line. Let's look for the parallel one to this area. And this is our outer structure. So now we're expecting, okay, there's lots of bullish momentum. It's approaching now this potential trend line, right? We do have equal lows. So this is a very, very long-term target, right? So let's see what happens with the dollar. Again, we're going to go to the live markets now. So this is the live markets. Now, what do we have here? We do have a bit of a liquidity pool approximately just around this area. I'm going to have to redefine it on the smaller time frame, but this liquidity pool has been filled, right? Any other trend lines that maybe I've missed out, always double check. I do prefer to trade my trend lines on the daily. I start from the daily, but on this scenario, started for the weekly just to give you guys an idea of plan A trend line, plan B trend lines, etc. So now this has been filled. And what does this look like to you? This to me looks like a potential 3 aces, right? Nice little 3 aces. So that has been filled. Again, the 3 aces are a 1, 2, 3. That's the first ace. 1, 2, 3. That's the second ace. And then obviously 1, 2, 3, the 3 aces. Okay, so that's complete. So multiple trend line taps at that area. So what else is there? Is there anything else I've seen? Okay, here we go. Now there's equal highs at this particular area. Which means now that this liquidity pool has been filled, let's look for the liquidity pool just above, which will be based off this structure here. As you can see, there's a little trend line there, and we start from here towards this area. So let's tidy that up. This is our liquidity pool in the event that price doesn't even come down here or down there. It could easily just do this and then go long. I mean, maybe it could respect a larger pattern that we haven't potentially seen yet. So let's just say we start from here. And there we go. It might even come up here. We don't know yet. Really depends on what price action is telling us. But now the first step is to identify all the equal highs, etc., and the equal lows. So we do have this as a potential scenario. Obviously, as price approaches that area, we'll monitor it. If it keeps on going up and up and up, then we know to look for a boomerang at maybe a liquidity level here on the daily, right? A bank level. So we're just drawing everything, breaking everything down, moving with the market. So this is complete, and we do have some equal highs there as well. So just bear that in mind. Now let's go to the 4 hour. Okay, so what can we see on the 4 hour? So first of all, let's tidy this up. This looks too messy. So let's tidy it up. Let's separate this, just have it as a reference. This has already been filled, obviously. This trend line has already been hit. And this has already been sort of filled. There we go. So this is complete. Let's do this properly. Always, always, always double check your trend lines. There we go. Go to the very bottom. There we have it. So now we've got this particular scenario. So we're definitely expecting price to continue going south to complete a potential, right? Let's just make sure that your trend lines are pinpoint accurate. This is very, very important. There we go. Okay, that's fine. And what can I see? 1, 2, and now a potential 3. 2 scenarios. Take out the equal highs or break and retest and complete this pattern. 1, 2, 3, which is obviously the 1, 2, 3 of this pattern. It might just complete this larger pattern that's in play, right? Maybe a break and retest, or maybe a rally to the upside. So many scenarios. Again, it all depends on the market sentiment, compression, momentum, break of structure, all the rules that we've covered before, right? All depends. But for now, the most relevant structure, the most relevant piece of price action is what's happening right now. So what is happening right now? Let's now start with structure. So we start with structure. But before we start with structure, this is very important. Make sure to follow the market first. Get this brush indicator, right? Because it's quite difficult to spot structure when you don't have too much experience. The best thing you want to do is use the brush. So I'll start from here, right? This is the new high, the new low. New high, right? Hasn't broken structure. This is just a liquidity grab. Finally, it made a new move. This is the new structure, right? Pulled back, made a new move. This is the new structure. Hasn't really broken structure. This is the most relevant structure. Stuck within this sort of range. And finally, we have broken structure. 2 very, very strong candlesticks. So now we're looking at this particular low and this particular high. So we're in bearish territory. Now that we're in bearish territory, this is telling us, okay, are we likely to do a stop hunt of these equal lows and then go long, or maybe a stop hunt of the equal highs and then go short, right? We just identified the bears are in our favor. So let's actually update this. There we go. Update this break structure. This is the previous structure right there. Okay, equal highs, etc. We're in bearish territory. So let's go to the 1 hour now. 1 hour is when we can start to redefine everything. So on the 1 hour time frame now, this is the 4 hour high. We're focusing on the 15-minute structure breaks, right? Depending on your trading style, but with my trading style personally, it normally just starts on the 15 minutes. So this is the 4 hour structure / the 1 hour. Follow it around if this is the previous structure, right? And you can see there's a bit of a break of structure here. So now we need to move the break of structure indicator towards this level. So now this is the most relevant break of structure. We've got the equal highs and equal lows. It's really, really, really choppy at the moment. Okay, now that we've got the 1 hour chart, let's update the pattern. So is there any relevant patterns that we could potentially see? Let's actually find out. So we do have, let's say we've got, okay, we've got this playing out. Now we've got this, which is playing out. Okay. Now, what we want to do is add any trend lines that's relevant. So we can start from here, for example. So now this is complete, right? Bit of an X, almost a 3 aces potentially. And now we have a break of structure. Let's separate the pattern, right? We're going to separate the pattern. Now we're focusing on this piece of price action. Bearing in mind, this is the live market. Okay, so we've got a break of structure. Now, a break of the trend line, sorry. Now, how did it break the trend line? Very, very, very important. It broke it with a wick, and it's just really choppy. The balls are coming into play. I don't believe this is likely to continue going south, right? It's looking really, really unlikely for now because the momentum is not really clear. So if we follow, structure is still stuck within this range, right? It's still stuck within that range. So let's actually see what could potentially happen. Let's go to the 15-minute now. So on the 15-minute, now we're going to update everything. We go back in time. This is a pullback, relevant structure, pullback, 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 break of structure. And we just keep following it around, break of structure, as you can see. This is the most relevant structure here at the time. So we're using this. This is just a range. Ignore this. Finally, a broke structure. It made a new low caused by this particular high. Didn't really break structure here. Pulled back. Now it broke structure. So we're looking at this and then this. Do a range. Liquidity grab. Liquidity grab. Still in bullish. All this is bullish territory. And then finally, strong commitment from the buyers, as you can see, for the momentum caused by, what caused it? This particular move here. So now we're looking at this as our relevant structure. So let's update this pattern. We're looking at this, and then we are looking at this as a potential break of structure. Okay, and now on the 15-minute, it's telling us definitely a different story. So it's broken structure to the downside, right? It's broken structure. At the time, this to me is not a break of structure. This is not a break of structure. But then this candlestick here, to me, yes, that one broke structure. Okay, so that one broke structure. Very, very, very important. This is why you need to really zoom in. So let's zoom in now. So now we've got a break of structure. So this break of structure from the start of this 15-minute move wasn't enough with this candle. It wasn't enough with this, or all of this range, or this ugly, very, very weak candle. It was this one here. This was the clue. Okay, so that was a clear break of structure. So now, what is the most relevant high? If we just identified, this is the new low. This is the previous high. Try to break structure here, but not enough. It's just a small little body. Look at the body of that bearish candle. Very, very tiny, followed by a bullish candle. Not relevant at all. So let's update the pattern to what's relevant to the most previous structure, which should be there. And now in the 15-minute, there we go. Look, now it's painting something completely different. Now what I can see is it's a bit of a bullish pattern here. It's breaking structure to the upside, as you can see. Not yet. Let's separate the pattern. So what we can expect is potentially even this larger sort of pattern forming. So look at the break of structure. So we're literally breaking down the markets in live real time right now. So now there's been a bit of a break of structure, right? We've updated the break of structure, but let's go to the most sort of relevant equal highs now. If there are any equal highs, no, that's already been liquidated. This to me is the next relevant equal highs. Again, let's zoom in and out just to recap what is happening or what could potentially happen. So we've got a break of structure. So now we're definitely expecting some form of a retest and a continuation to the upside, right? So that is the game plan on the dollar. On Friday, it's 1 p.m. at the moment. So now what we can do is update this particular pattern. So if we update the pattern, can we see anything? So let's update it, move it up. There we go. We're going to move it up. So we started from here. Moving it from here is also a scenario. In fact, there's two relevant structures. So there we go. There we go. Look at that pattern right there. Nice, clear, sort of expanding channel pattern, as you can see clearly. So now, in terms of an entry, we know that on the bigger time frame, it's very likely to continue going south, right, to the downside. But before the market comes down, it needs to grab some liquidity here to get the momentum, get the fuel, the petrol to push price back down, do a stop hunt, and then we can reevaluate what is likely to happen down here, right? So let's go back to the 15-minute. Okay, this is the 15-minute time frame. Let's remove this. We finally now have a break of structure, as you can see. So let's remove this. Now that we've got a break of structure, where's our next target? Okay, we've got equal highs. There's a bank level right here. And there is also an imbalance right here. Okay, hold on. Let's just do this properly. There we go. Look, this is really important. Zoom in, stretch your screen, and do it properly. Look at a big difference. This is the difference between you missing a trade and not missing it, right? So, okay, this is fine. Perfect. There we go. Now let's go back to the 15-minute. These are our point of interest. These are the conservative targets. Really what we want to aim for is the 1, the 2, and obviously the 3 up here somewhere. 1, 2, and then obviously maybe a drop to the downside. But if we're aiming for this trend line and we've got a confluence here, we're most likely going to do a stop hunt of the previous structure. That's very, very important. Always, always, always think of stop hunt, stop hunt, stop hunts. Where's the next stop hunt? So on the 15-minute time frame, there is a bank level that hasn't really been filled. So let's actually zoom into that bank level. Has it been filled? Almost got filled. So it's very likely to go there. So let's do a banker block as well. So there's a small pullback on the smaller time frame. As you can see, we can even go to the 5 minutes just to show you guys. Perfect little banker block. This is a good area to be taking profit at the 50% range of this banker block. Okay, let's go back to the current time. This is a good target, right? So that particular target, this banker block right there, especially because it was the move that took out previous structure, right? So it's got all the confluence for a lot of profit taking and, you know, potential sell. So this is where I'm expecting the dollar to go to next. Rally to the upside, little rejection, potential flag, and then boom. This is the target on the dollar. And we've got a conservative target as the plan A above the equal highs and a conservative target at plan B, which is above structure, stop hunt, the trend line, and also the banker block that took out structure. Okay, let's zoom in. So what's happening now is, all right, it's wicking a little bit. So why is it wicking? It's probably doing a bit of profit taking. It's doing a stop hunt of the 1 minute and the 5 minute traders, grabbing some liquidity to potentially go short. What was the move that took out structure? Wasn't this move and it wasn't this move. It was this little banker block here. So it's very likely that price will come back and retest this level. So now we've got this and we've got this area as a potential retest, right? This is the banker block. As you can see, might even go a little bit further and complete a slingshot, right? Of this imbalance right there in the middle. Again, the slingshot is a stop hunt of the banker block. So you've got the banker block, stop hunt of the banker block, which is a slingshot. Now, price could easily also do something like this. It might form maybe some compression or equal lows and then stop hunt and then it rallies, right? So if it forms a imbalance, then we just update the pattern and we draw our imbalance. But at the moment, there's nothing to base that off for now, right? But definitely bullish. So let's update this. So we are expecting a pullback towards this particular entry right here. Maybe a little bit higher if there's an imbalance, and then a potential slingshot of the banker block right there. So this is how we could anticipate and move with the market. Now, once this setup does actually play out, if it plays out, then we just look for the same thing. Let it trigger. Once it triggers, wait for a break of structure, slingshot, or a banker block, and then we get involved on a short. Now, even though we're anticipating a move to the downside, this could easily happen at 1, 2, 3, you get your entry, you get the retest, it comes back down to this level, but then it could easily rally up to the upside. Who knows? But then we need to update the pattern. There might be a symmetrical triangle forming, right? And then a boomerang, and then a drop. Take out liquidity, and then go long, or even a break and retest. So regardless of the trend on the weekly, the daily, the 4-hour, just go back in time, go step by step, and you can move with the market regardless of direction, whether it's buyers or sells, and you can easily quickly change bias. So don't let a bias cloud your judgment. Don't let the fundamentals cloud your judgment. Just trade what you see, not what you think. Simple stuff. And right now, what I think might happen is a drop to the downside to complete this pattern, right? Very, very likely. That is definitely a scenario. But what is the market telling me? What can I see? I can see there's a bit of a large compression. So any minute now, this is going to break out to the upside. But the most relevant price action is this ascending nature pattern. So I'm expecting a rally to the upside, complete a boomerang, and then a drop to the downside. Then we can reevaluate any potential setups from around this area. So on that note, just focus on what's relevant. Yes, we're in a large bullish pattern, but this is the most relevant piece of price action. So I'm definitely expecting shorts on Monday next week from around this area, and then we'll see what happens. You see, there might even be a banker block around here, and then we just update it. So this is the game plan for the start of next week on the 2345 on the 25th. But right now on Friday, I am expecting price to rally to the upside, right? Break a structure, etc. So this is how you break down the boomerang from top to bottom. And to take it one step further, we need to go to the 1 minute time frame. Let's go to the 5 minute time frame. Again, at the moment, there's not much we can do since it's the live markets. But once price does obviously approach our area, right, out of point of interest, and once there's a break of structure, if it reacts from plan A, then we follow structure round, right? We do the same thing, but on the smaller time frame, no difference. Break of structure, you follow it, you follow it, you follow it. And then finally, we implement this setup. And this is the big potential scenario. Let's say there's a banker block here, or even an imbalance, whatever it is, it will be in confluence of something. And then, oh, look at this. A left shoulder, the head, and the Quasimodo. So this is our entry. This will be the entry on the dollar, right? Right shoulder entry, stop loss right below the head, very, very tiny entry. Obviously, with the Euro USD will be the flip side. We'll be looking to sell the Euro, right? Since there'll be dollar strength. And this is how you can capitalize on big returns, right? And really we'll be aiming for this particular target up here, right? 60 in our trade. And this is how you break down the markets with the boomerang, bang level trading, 3 aces, slingshot, right? So we need a pattern. At the moment, yes, it's made a new high, there's bullish momentum, but we do want to see some form of a pattern approaching, right? Then we can implement a sniper entry on a limit order, or we wait for confirmation, wait for a break of structure, and then you get involved with a conservative stop loss. You don't need to put your stop loss below structure down here. It doesn't make sense if you're following the market step by step. So you place it below the most relevant structure, right? And obviously, if there's another pattern there, even better. If you see something like this and there's a pattern here, then this is a no-brainer. There might be a second tap here, one tap. This is just a power move to the upside. Even better if it's a symmetrical triangle, right? And then you might even have the STT, which is Daniel's strategy, which you can also implement into the bang level trading and just become a beast of a trader. So these are all the confluences that you need when you're trading bang level trading and smart money concepts with patterns and evolving patterns with the boomerang. Now let's look at a decent entry where, okay, we are anticipating price to drop to the downside and get a reversal, right? We do have the bullish momentum, broken structure. We're expecting some form of a retest towards our potential entry, right? Now, just to recap real quick, make sure there's a pattern here. So you need this as one of your rules. So obviously this will most likely be invalid because it's not in confluence with the pattern, right? Normally you want it to be a bit below. So there's a bit of a liquidity pool right here. So then this will be more probable, right? So what you need to do when you're back testing, this is really, really important, guys. Listen carefully. So when you're back testing, make sure that you identify the win rate of all your entries, right? So you need to backtest all the different variables of a banker block, the different variables of the wedge. Is it a certain angle? Is it wide? Which one has the bigger win rate, right? This way you can start to filter out different ways of improving your strategy. It's a little bit like, let's say you're trading a bullish engulfing, right? Let's say you're trading a bullish engulfing and you have a bullish engulfing, you enter the market of the bullish engulfing. Okay, cool. You've back tested it. You've got 5 years of data, but then you still have a losing streak. Your back testing doesn't reflect your live trading, right? It's because you don't have all the variables. This is a bullish engulfing. A bullish engulfing might be after a big spike below support. It might be a bullish engulfing after a range. The length of the bullish engulfing can have an impact. It might be a range and it might just be a little bullish engulfing. They're all going to have different win rates. So when you enter a trade in the markets, but then you somehow feel a bit hesitant and a bit nervous, but you still take it because it is a bullish engulfing that support. And the fact that you feel hesitant and a bit nervous, but you still take it, you're basically gambling subconsciously. It's because you don't know the win rate of all the variables of your bullish engulfing entry. So you need to backtest every single variable. There's probably 50 variables of bullish engulfings, just speaking out loud. Find the best one, right? Find the best variable. Once you do that, trading becomes simple, it becomes easy. Psychology becomes very, very easy because you're following a strict set of rules. So a bullish engulfing might be a support. You might need to backtest trend lines with it. Which one has a bigger win rate? It might be a bullish engulfing with a very large stop hunt, and then you get your bullish engulfing here, right? So you need to find out all the different variables of your bullish engulfing if you're trading price action. That's just an example, right? This is an example with the boomerang on back level trading. You need to backtest all the variables of the pattern, you know, the distance between them. I've already told you that. You need to backtest the size of the banker block. You know, you need to backtest this, you know, the distance between the liquidity pool and the bank. All these different variables. You need to find something that resonates with you, find a strict set of rules, and then you'll be a much more composed and profitable trader, right? So just really, really important, backtest everything. Don't just follow this particular entry. Yes, it's extremely profitable, but you'll find something that works for you. Now, let's look at okay, we're expecting a buy, but why not sell it on the way down if we're expecting a buy, right? So when you look for potential entry, let's go to the 1 minute time frame, and we're still implementing the same thing, right? Let's go to the 1 minute. You've got your breaker structure. We'll follow it around. A rally. This is a bit of a pullback. Rallied. Hasn't really broken structure. This is the most relevant structure at the moment, as you can see on the 1 minute time frame. So no trades for me. I personally would not be taking any trades there unless we get a break of structure. Once we do, then we can sell it towards, you guessed it, the banker block. So the same scenario, you do not need to just wait for your entry. You can still take a potential trade if it presents itself, but we need a break of structure. The same scenario that we're implementing for the rally, we can do it on the way down towards our rally.